All right, today is Friday, October 30th. It is the final trading day of the week, and it's the final trading day of the month of October. This is when I usually share with you the performance out of our live trading room based on the NASDAQ 100 futures, trading a 5-minute chart, and using the adaptive entry system signals. Before I get to that, though, I've been talking more about how effective these same signals are with options trading. We have a lot of options traders in our community and get the question all the time, do I have to trade futures in order to take advantage of the adaptive entry system signals? And the answer is no. So a couple days ago, I showed the S&P 500 and the opportunities that exist there. So I just pulled up Amazon today, and I'm looking at a 30-minute chart on Amazon. And I just very simply want to walk through here quickly and show you kind of the sequence of what I see. If I just go back a little bit here, here's a signal. So all I'm looking for are the signals that where it's a second red bar in a new sequence or a second blue bar in a new sequence. Those are the signals that I want to identify. Those signals are telling me that when I have a red signal that we have a short trend coming, and when I have a blue signal that I have a long trend possibly coming. The signals reverse. If I hold the entire cycle, the signals are going to reverse when I have a neutral white bar or an opposite colored signal open. So in this case, if I go back to October 16th, 3:30 in the afternoon, there's an opportunity to go short by buying to open an option, a put option on Amazon. That bar opened at 33.02 and traded down to 31.60 within that 30-minute period. If you held for the entire cycle, you would have held from 33.02 until you exited here at 32.21. So it's about an 80-point move. 80 points if you're trading a 50 delta on the option, on the put option, there's a 40-point profit, and it'll be roughly around 40 points of profit. And on a single contract, that's $4,000. That signal came on the 16th of October, and if you held for the full cycle, which we don't really recommend, but if you did hold for the full cycle, you're out 4 days later for about that amount. About $4,000 on a single contract. The next signal was a signal to go long. Now there wasn't as much movement on this to the upside. You would have been at 32.48, and the white bar comes on. You're out at 32.31, so you actually lost a little bit on that. Your next signal here is to go short. You can start to see what the sequence is telling you here. White bars, we don't take any action. Blue bars, we go long. Here's a really nice trade. Gave us an opportunity to go long, had a really nice upside profit. I'd be putting in a bracket order there to protect my upside and putting a stop in and still letting it run. I'm not going to let it run all the way back against me, but if I did hold for the full cycle and I didn't put anything in there to lock in that profit, I'm out right here. So I'm long around 31.67 and I'm out around 32.15. So there's, let's just say 38 points of movement. You got about 19 points of potential profit if you're trading a 50 delta, which is $1,900 on a single contract. This trade right here, you can see here, you're going to have winning and losing trades. This trade didn't work out at all. You're in on that bar to go short, and you're out on the next 30-minute bar with a small loss. Actually, the loss right there is from 31.82 to 31.83. So not a significant loss. And then you're right back into a long cycle, you're right back into a short cycle. There was a huge short cycle today. The first 930 bar opened up red, and the second bar is when you actually take your entry. You buy to open a put. You're in at 31.02, and by the end of the day, it had traded down to a low of, I think that low was 30.19. So you've got about 80 points of movement again. There's a nice $4,000 profit off of Amazon just trading one contract of an at-the-money 50 delta put. So the point here I wanted to make is that the adaptive entry system is extremely powerful for us when we're trading NASDAQ futures using a 5-minute chart, but it's just as beneficial when you want to trade options instead of futures. You just got to pick what stocks you want to trade. We have a watch list of stocks. You can see over here my watch list of stocks, 3 indexes plus these stocks right here. Those are the ones that we pay most attention to. Tesla is another stock that we pay quite a bit of attention to, gets a lot of press, and you can see here how easy it actually is to trade Tesla when you follow a reasonable set of signals. Not every trade, not every signal is going to give you the same degree of profit, and some of them are actually going to give you a loss. Some of them are going to give you a small loss, some of them are going to give you a slightly bigger loss, but when you blend everything together, overall, you should do extremely well just simply following the trend bias and trend continuation signals that are part of the adaptive entry system. Okay, so we're going to jump over to our performance for yesterday and today. This is traded the NASDAQ 100 futures on a 5-minute chart. This is zeroing in on the trades that occur between 9:30 and 12 o'clock Eastern, taking all of the adaptive entry system signals. And also we focus on the trades that occur between 7 a.m. Eastern and 4 p.m. Eastern, or whenever we decide to stop trading, which is generally sometime between 3 and 4 o'clock. And in that case, we're only looking at the trend and trend continuation signals, much like I just showed you on the Amazon and Tesla charts. Now we focus on these categories because we're using them to demonstrate to you as a community of traders how important and how powerful the personal trading plan is. If you can track your performance and you keep track of what you've done on a daily basis, then you want to put that in context of, well, what if I continued to do this for a 52-week period? What does that look like? It's a missing link for most traders. They don't really understand what their overall performance is going to earn for them over the course of 12 months. And so we've built a tool called the Personal Trading Plan, and we break our trading down into these 2 categories, 9:30 to noon and 7 to 4, all signals and the trend bias and trend continuation only, just to give you a different flavor of how these signals work in terms of both time frame and which signals you want to focus on, and then plugging it into your personal trading plan in order to see what your overall performance could be. So we're going to plug in for yesterday and today. Yesterday we did 60 points of profit. Now with NASDAQ 100 futures, each point has a value of $20. And so whether you're winning or losing, it's a value of $20. So we did 60 points yesterday, 12 trades, and today we did 35 points, 9 trades. That's in the 9:30 to noon category. Yesterday, trading the trend bias signals only from 7 to 4, we lost 27 points, right? So like I said, we're going to have winning days, we're going to have losing days, we're going to have winning trades, and we're going to have losing trades. Yesterday, we lost 27 points. We did 17 trades. Today, we made 73.25 points, and we did 16 trades. So I'm going to pull up the personal trading plan, and this is the plan, and I've got 2 tabs down here, one for the 9:30 to 12 all signals, and then one for the 7 to 4 just the trend bias and trend continuation. All right, so I'm going to start with our 9:30 to 12 category. I'm going to go over here, and like I said, we did 60 points yesterday, so 60 times $20 a point, and we're doing 3 contracts. Our personal trading plan has scaled us up to 3 contracts, so that's $3,600 of profit. You always enter a dollar value of your profit, not the point value. And we did 12 trades at 3 contracts per trade, so we did 36 contracts. And today we did 35 points, so 35 points times $20 a point is $700. We've scaled up to 3 contracts, so it's $2,100, and We did 9 trades today at 3 contracts per trade, so that's 27 contracts. All right, before I get into the analysis, I'm going to plug in the other time frame data. 7 to 4, yesterday we lost 27 points times $20 a point times 3 contracts, so we lost $1,620. And we did 17 trades yesterday, so 17 at 3 contracts per trade is 51 contracts. And then today we did 73 and a quarter points times $20 a point. 3 contracts is $43.95 of profit. And today we did 16 trades times 3 contracts per trade, so 48 contracts. All right, so once we have that data plugged in, I'm going to lock these at 3 contracts. That's how many contracts we traded today. And I lock those in the contract override column so that if I make any adjustments to my future forecast for the number of contracts, it won't affect what we've already done. Okay, so let's start with our 9:30 to noon category and see where we are. First couple of things that I look at are how much time has elapsed. So we're now 17 weeks into a 52-week financial forecast for our trading business. We've had 28 losing days, so by default, the balance are all winning days. And then the most important numbers to me are these two right here. These are the average winning days and the average losing days. So each day that we've lost has averaged to 36.6 points, and each day that we have won averages to 23.63 points. Now those winning and losing day averages also take into account the frequency rate of loss days relative to the number of weeks behind us. So these are variable numbers that are going to continue to be variable. You know, let's say we get another 3 months out and all of a sudden we're only losing at the rate of 1 day per week. Well, that would dramatically affect our numbers. And so we want it to be a variable. Maybe we increase our frequency of losses, and we also want it to be a variable so we have the most accurate possible forecast. All right, so now these two numbers are what we're going to use for our forecast going forward. We already have 17 weeks behind us, so now we have 35 weeks to go in our 52-week plan. How are we going to forecast performance for the next 35 weeks? We're going to base it 100% on what we've already achieved. So I'm going to change the future forecast to 23.63, that's for my winning days, and I'm going to change my losing day forecast to minus 36.6. That is not correct. Look at that, minus 36.6. And so now my 35-week forecast from next week forward is based 100% on what my actual experience rate is, my run rate for the first 17 weeks. That's the best way to manage your trading business, to determine what your income could potentially be. It shouldn't be a guess. It shouldn't be a, I hope this is going to happen. It shouldn't be, you know, pulling some number out of the air. It should really be based on what you've actually accomplished in the way of live performance. So what that tells us is that having started this account with $5,000 and allocating no more than 10% of the balance of the account to the margin required for the number of contracts we're trading, that my income forecast for 12 months is approximately $172,000. It's $172,496. And that assumes that we will not trade more than 3 contracts. At any point in time, if you scroll back up here, you can see where we started with just 1 contract back on July 6th, and then we graduated, scaled up to 2 contracts, and it's all based on the governance of no more than 10% of the balance of the account being allocated to the margin requirement for the number of contracts. Each contract requires $500 of margin at the broker that we trade futures at. So if I never change from 3 contracts, if I never increase beyond 3 contracts, the forecasted income potential is 172,496. Now, if I decide I want to increase that, I could increase the number of max contracts to 4 contracts. That change will not interrupt or disrupt anything that's already happened. Those remain at 3. But going forward could be 4 contracts. And that gives me a little bit of a boost in what my income potential could be for the course of 12 months. So I'm going to leave it at 3. It's a strong number at 3, having gone from $5,000 to potentially $172,000 over the course of 12 months. This is not, one of those smoke and mirror things. This is simply broken down to science and mathematics. The science is the adaptive entry system chart signals, which are all based on algorithms that we've shown historically to be very, very accurate. And when you pair together certain independent indicators into an alignment of those indicators, those trigger some of the adaptive entry system signals. So that's the science of really understanding the market and putting together a system of market metrics. And then the math is just simply saying, hey, I've got an established run rate. I know what that is. If I were to continue to trade and perform at that level of performance, then I can intelligently forecast what my income could be. So this isn't smoke and mirrors. This isn't, pie in the sky, kind of hoping that we could have that big number. This is just simply saying, if I feel comfortable that I can produce at this level every day, which I have been for 17 weeks, this is you speaking about your personal trading business, then it's reasonable to expect that I could have somewhere around $172,000 income. There's no guarantee that that's going to be your income. And that's because these run rate numbers can vary. Maybe they dramatically improve or they decrease in terms of their performance. You're going to find out over the next 35 weeks. If you've been with us for 17, you're going to find out exactly how that changes. But right now, as of the close of October, 17 weeks behind us, 35 weeks in front of us, the current income forecast is 172,496 with a maximum number of contracts of 3 contracts. Now let's take a look at our 7 to 4 category, because this encompasses a whole group of people in our community that like to start a little earlier, willing to trade most of the trading day, but they may want to only focus on the trend bias and trend continuation trades, not the consensus signals or not the momentum signals or not the fractals. There's other things that are part of what we talk about every day in our live trading room. But this just shows you a little bit of a variance. We've already plugged in our data from Thursday and today, and now we see we have 17 weeks behind us. We've had 18 losing days in 17 weeks, so a little different relationship between losing days and number of weeks behind us than the other category, but it's a variable that will continue to drive the averages for both our winning days and losing days. So our winning day average is 36.14. I'm going to put that in our forecast zone so that we can plan properly for the next 35 weeks. And our losing day average is 23.4, so minus 23.4. Slightly higher than it was before. Those numbers are going to vary a little bit every day. The further you get into your 52-week actual performance tracking, the less variance you're going to see on those numbers. Initially, in the first, I'd say 2 to 4 weeks, you might see some big swings, but you just got to be patient and you've got to keep trading. You've got to follow the signals and you got to plug your numbers in here so that you can establish your own run rate. Once again, leaving our contract max at 3, the forecast is $369,637. Again, that's just simply the mathematics of this particular run rate, this frequency of losing days to number of weeks forecasted forward is resulting in $369,637. That's again starting with $5,000. No more than 10% of the balance of the account is allocated to the margin requirement for contracts, and I can decrease or increase that number if I want to. If I'm feeling really comfortable with what I'm doing, but I just really want to have as little risk as possible, the smallest amount of risk possible. I could take this down to 2 contracts, and I still have a really strong $284,825. Maybe I never want to trade more than 1 contract. I don't want to scale contracts. I've already scaled. It makes me uncomfortable. I feel just not settled when I'm trading that. I feel really comfortable trading 1 contract. Perhaps that's what you're saying to yourself. So after 17 weeks where we've traded 1, then we've scaled to 2, then we scaled up to 3, you may have made a decision for your business. I'm going to trade 1 contract because I'm pretty happy and excited about that number right there. That's your choice. If you're slightly more aggressive, you're somebody who says, I really like my run rates, I feel confident with what I'm doing, I understand how I got to that level, I understand the losing days, I understand the losing trades, I understand why I have bigger winning days, I understand and feel comfortable with everything going on, and I know that the number of contracts suggested by the trading plan will never be more than 10% of the balance of the account for the margin required. So I'm going to take it up to 5 contracts. These are all different conversations that different traders are going to have with themselves about their personal trading business. And there are no 2 traders who will think about it exactly the same way. We're happy to discuss these options with you in our live trading room at any time. You just have to ask a question. But look at the opportunity here. If you scale up to 5 contracts, which is a very manageable number of contracts in my opinion, you're over $500,000 potentially as an income. That's entirely up to you. Certainly wouldn't do that until you really feel comfortable and strongly positive about how you derive the current run rate you have. I'm going to leave it at 3 contracts. I think that that's an outstanding potential income for 52 weeks, having started with $5,000. All right, so I'm going to jump back to the performance tracking. I just want to take a look at the monthly averages. This is a new feature that Erin has included in the spreadsheet, and she's now been able to add win-loss ratios for the months. So you can see what the point production was each month in the 9:30 to noon category, point production here in 7 to 4. And we have one other category that we track. We don't put it into a personal trading plan, but we track it because in overall performance it's the best performing category we have. 7 to 4 taking all signals. That's averaging $1,242 a day. Sorry, 1,242 points over the course of the month. If I want to take a look at it on a average day, it's $1,254 a day for the first 99 trading days that we've tracked. The other 2 categories, 7 to 4 trend bias signals, is averaging about $650 a day, and our 9:30 to noon category is averaging about $358 a day. Those are strong numbers, folks. Those are really strong numbers. We pay attention to the frequency of losing days in every category. We can stack rank the performance of all of these different categories, both time frames and signals. We can stack rank based on the number of negative days, the point production, and the win-loss ratio. So that's helping to guide us, and it's helping us guide you in terms of what you could expect out of different ways of trading. Somebody asked today, well, what if I only traded from noon to 4, taking all of the signals? That's all 4 of the adaptive entry system signals. Well, we can very easily tell you that in the last 99 trading days, that averages to about a $511 a day performance. During those 99 days, you've had 13 losing days. You just have to prepare yourself for losing days and a lot of winning days. But overall, it's the big picture average that is the most important thing, I think, to focus on. So that's it for the day. I'm gonna show the detail here. We have several people who like to just take a look at the detail. This is the detail from Thursday, October 29th. First trade after 7 o'clock was at 7:05, and then last trade was at 3:20. And then today's detail, first trade was right at 7 o'clock, and then our last trade was at 3:15. Now we do actually track our performance from 3 a.m. forward. But we're at 7 when we're showing up. We're looking back at those performances. We're not expecting that anybody wants to trade starting at 3 o'clock, although if you do, we can help you understand what to anticipate in terms of performance. But this is all leading us towards some auto trading in the future, and some other thoughts we have around putting together a proprietary trading firm to basically have traders that are working a variety of hours trading these signals. The opportunity is just enormous in our opinion. The collaboration between New Cycle Trading and Options Moneymaker has really proven to be just a wealth of opportunity for any individual trader, retail trader who wants to earn some extra income, who wants to maybe convert to a full-time income. And it's also offering some opportunities here internally for us to think about expanding and doing some other things, you know, drawing on some investment capital that we are looking at, and continuing the development of auto trading and some other really amazing tools where I think AES, the Adaptive Entry System, is just really getting started for traders. So it's a great place to start, and I think that there's more to come down the road. We're happy to have you as part of our community. We're excited that you're here, and we consider it a privilege to be able to help you learn how to trade and help you earn from your trading. Hope you all have an amazing weekend. We're looking forward next week to starting a new month of trading.